So I wanted to catch up with PIPS Wizard Pro the last time that I did the update. Yeah, it looks like it was back on July 4th, so we're due to take a look at it. I spent some of the morning filing copyright claims with YouTube. A lot of people decided that they could just steal your videos and upload it to their own channel. YouTube's really great at taking those down, though. And it just, it just highlights in my other video. I'll talk about fake reviews and scams. I'm going to tell you something. I'm going to be straight up, and you've probably seen it. Most people on YouTube are just, they're morons. They know nothing about trading. They don't have the products. They're just all just full of crap, most of these people. And I guess it gets frustrating for you guys as well. Watching or looking for something legitimate. Someone that knows what they're talking about, and you come across all the kind of crap that's out there. It's tough. It's tough. I feel for you guys. Anyways, let's take a look at PIPS Wizard. And here we go. So I said we've already checked. Well, this has been July 5th. We have now also you want to talk about trend. Again, with PIPS Wizard Pro, just like with Infinity Scalper, he's very, very clear. You want to trade in a market that's not consolidating. Okay, you don't want it there. That's a different. You can trade that, but it's a different style of trading when you're trading consolidations. So just a simple moving average, 55 I've used here. We can change it to 50. It doesn't really matter, So pretty much you're looking for uptrends on using the 50, okay? And let's go over here. We have a downtrend. We're going to ignore it because we're looking for uptrends. And here's the first uptrend right here, and it goes up 260 pips roughly. You get in on the close, or you can get in on a break of highs. It depends on your trading style, and you trade it up. And there's profit targets you can do. You can also just trade into former areas of, well, for a long, obviously, you're going to look for former areas of support that has broken, and it might be resistance. You see these clusters of price action way over here. This is back in May 2015. And you just look, in this area right here, when you see those kind of prices, when you see your trade heading towards those kind of prices, start tightening up your stops. Or you can just use profit targets, or you could just wait until we get a trade in the opposing direction. That's entirely up to you. So right here with Aussie US, the trades that we're looking at, let's just go from the close just to make it easy. To highs is 250 pips. Looking at the popular Euro US dollar. And again, we have our short trade here. We ignore it because here's the 50. We look over here. We have a trade set up right here. And this one rallied about 210 pips before we're starting to get a little bit of a pullback here. So you got 200, what did I say? Let's say 210 pips on the Euro US dollar. And this trade happened the 16th of July. Okay. And for stop losses, you can look in the PDF. It gives you areas. I mean, I guess areas, but price targets to use as well. You can also just look, okay, well, where would this be invalidated, right? Just below the lows here. Or you can use an ATR stop, which is, put up ATR, 14 period ATR, 1.5 times ATR for a stop. Whatever's whatever you're comfortable with, whatever you're testing, whatever you can do consistently. All right, so looking at 210 pips on the Euro US dollar. This is the US dollar, Japanese yen. This used to be an amazing pair to just trade and hold just because of the differential in interest rates. But you can see here we don't really get any trades. It's just choppy price action. And you can see it. You have your swing high here, you swing low, lower swing high. This whole area just called it a swing low. Then we come up here. You can see the price pattern that we're making here. You can just quickly draw your lines. See that it's starting to compress. So you wouldn't get this short trade, even though it does do very, very well. You don't get this long trade if you're using the 50 period. Okay, you can use whatever you want. Just the 50 period is a longer term trend determinator, or you can just simply use price action. Higher highs, higher lows, and vice versa. Whatever you want to use, like I said, just be consistent. All right. So you wouldn't get any of these trades. You wouldn't get the short trade either that did well. So that's just the nature of the game. All right, let's move on. Now, this is the Euro Japanese yen. I don't know if I covered this in my last video, but you can see, once again, you would miss this long trade. You would miss this short trade. It happens. You would miss this short trade, but this long trade is right here. And you could get out here when you're getting the short trade set up if you want, or price targets, or you're using structure. Again, it depends on what kind of testing you've done. And this is if I get out when this candle closes, this is a 488 pips, so 480 pips, and this triggered in this would have been well, June 16th, so I might have already covered this one. So if you did get this trade back on June 16th, you had a really great trade. Let's move on. What else we have here? Well, same sort of thing, right? We're missing some trades. And that's just the nature of trading. No matter what your system you're using, you're always going to miss a trade. You missed this short trade, and you can see it just does a great short. You missed this long trade, which went up, pulled back, and skyrocketed up. Now, like I said, this is a 50 period I'm using right here. Right? If you're to change that to a bit of a shorter term, which is totally legit, you could take this at the close, you get pulled back, but then you'd rally up, almost 600 pips. The short trade here actually sets up above this, so you would miss this nice short trade, which falls for to lows, obviously 770 pips. So, like I said, it's going to depend on what you're going to use for trend determination. That's the key. That's vital. And you might also say, you know what? I'll just trade trend lines. Here we go. I got my swing up here. This. Now I can connect these two. That means I could take these short trades all the way through here. I can't take this long, right? But look what happens. And I covered this in Infinity Scalper, and this is getting in sync. We've got, and this is if we're not using a moving average, okay? We're just going to use trend lines now. We got a price break up, right? Basis breaks above the trend line, pulls back, and goes to the upside. The long trade enters here, right? This is whenever you're trading trend line, this is a normal thing that happens. Price will break it, pull back to test it, go back up, right? Doesn't always happen. Let's be honest. It doesn't always happen. Also look for these. Don't always look for the V reversal here kind of movement. You can actually look for what happens here. Breaks below, comes back up, tests it, and then goes back up. Right? These are basically called inner horizontal support and resistance lines. I use those a lot in my trading, as I do with inner trend lines. These ones as well. So you would, if you're using that, you got some great trades. I'm not going to conclude those in the total pip count, only because we're just covering with the moving average right now. And this will be the last one I'll take a look at here. Just keep this video nice and short. This is the US dollar, Canadian dollar. As you know, in Canada, they raised interest rates. Interest rates are prime drivers of the Forex market. So what happens? You don't get involved in any of these short trades because we're going up, but you do get involved in this long trade back in April. All right. What happens over here? We are now short all the way through here. Get these little exits, but you notice there's no blue lines drawing, right? These don't last very long, do they? So again, it's going to depend on how you're going to trade it. And this fell down for 770 pips. You can see they're shorting. The only and you see, even though we've got these the triangles here, price never continued. All right, so there would have been no follow through on these, depending again how you're trading them. Right, you got to test your own way. So you have a potential for over 700 pips on the Canadian dollar against the US dollar. So that's that. Click my link below. Pick up Pips Wizard. Test it yourself. All right, go through it. Don't just look at these. Like I watched some guy's video. He was looking at some of these products. He didn't have the product, obviously. Most of them don't. But I saw one of their comments. They said, "Well, these are scams." And I'm thinking, what an idiot. How is this a scam? This is giving you entries. It's not taking the trades for you. All right. These are not out of the box where you just put them on your MetaTrader and start trading them. That's just stupidity. That's what that is. Actually, let's look at the pound US. I'm a big fan of the pound US. Again, well, I was a big fan. Look at this sloppy mess, right? You got the long trade. Well, it does go, right? Sets up, rises 220, right? If you're targeting, well, this is a good example of targeting support and resistance areas. You know, this whole zone in through here is a price target, right? Obviously, you don't take any short trades because we're still long. And this one went long here on the close. You got a little bit of juice, 20 pips, and it fell back behind you. You don't take these shorts. This is a long trade here as well. Hope it's not an artifact of something going on with my MetaTrader, because I don't see any lines like we do with the blue, even though this one continued to go. So it could be my my MetaTrader's not. Yeah, see, because this is a long trade, we should have these blue lines following it up, but we don't. You can actually trail behind these blue lines as well. So let's get one that we knew looks. Well, this looks better, right? You can see the lines. You can actually trail up behind these if you like, right? You could do that for your trailing stop as well to keep things simplistic. But you know you're going to have some gaps occasionally between these and these candles, right? So just, you know, maybe just keep it simple. Yeah, so what was I saying? So he said it was a scam, and I'm like, well, obviously they have no reason to say that. They don't state why they say it's a scam. They say it's a scam, and the chances are they probably put it up, just started trading it with real money, lost money. There's nothing scammy about these, you know. Even a coin toss, you know. Anyone that's ever read Van Tharp and Tom Basso, they talk about, you know, a coin flip, and it's about risk management, right? Money management. So they're not scams, you know. Maybe they're not saying Pips Wizard or Infinity or any of the other ones are this, but maybe they're not fully thought out in terms of a tested trade plan. And rightly so, because if you think back to the turtle experiment, all these traders had the exact same training in the turtles, and most just flamed out. That's what happened, right? It doesn't matter. Exact same rules, exact same methodology. And the results were inconsistent across the board. So what does that tell you? It doesn't matter, right? People are flawed. That's what they are. And that's just the way life is. You're going to have to get these, understand what you're looking at. You know, like if you're looking at this kind of market right here, for example, right? This is a consolidation pattern. And when do you know it's a consolidation? You generally know it because this is an uptrend here. You got the higher high, right? Higher low. This is a double top, and then we put in a higher low and another. Look at this. This is now triple top, and we don't break below here. So this is when you get consolidation. Once that pattern of higher lows and higher highs break, so we get this, and then we get something like this. What are we looking at? We're looking at consolidations, and you don't want to trade these in consolidations. You don't want to do that. That's just account suicide, right? Mark off the highs and lows, and if we're trading in the middle of these, don't trade. You know, find something else to do. Scalp it if you like. You know, once we get to the top, you know, look to scalp short, vice versa. That's a smarter way of doing it. Anyways, thanks for watching. Hope you enjoyed the video. Click below, pick it up if you like it, and we'll talk soon.